Chartbusters, let's talk to the management of Ratnamani Metals. The stock is on our radar today as the company has won orders worth nearly 1,200 crore rupees. To tell us more about this and the outlook for the business, we are joined by Manoj Sanghvi, who's the business unit head at the company. Thanks a lot, Mr. Sanghvi, for joining in. It appears like it's one of your biggest order wins. Can you give us a sense of how much this order has been split into in CS and stainless steel pipes, and where is this order coming from? Which sector?
Morning.
Morning. Go ahead.
So we booked an order from the 1st of August to 15th of August, approximately 1,200 crores. Most of it is carbon steel pipes. Approximately about close to 100 crores is from stainless steel. Rest all is for carbon steel pumps.
Okay, all right. Hi Manoj, good to have you on the show. So around around 1,100 crores would be carbon steel, and the remaining would be 100 crores odd would be stainless steel, right?
Yes, correct.
Okay, all right. Now, which sector is it coming in from? My guess is that it's coming in from the waterways segment. If you could confirm that. And also, in the past as well, on the con calls, you have said that there are several water projects that come on stream. So, could you tell us what kind of margins would you enjoy on this sort of a project?
So, coming to this segment of the total 1,200 crores, roughly 70% is for water, which 802 crores is the single order, which is the largest in the history of Ratnamani, which has come from a water project in Rajasthan.
Oh, okay. All right. Water project in Rajasthan. So there is plenty of scope then. These water projects have started going. The country has been waiting by for these projects. So I guess, you'll be eyeing plenty of business out there. Given that sort of a backdrop, what kind of margins will you enjoy on this? In the first quarter, your margins came down drastically. But otherwise, on this particular project, what kind of margins will we look at?
We are seeing a lot of thrust in demand in the water segment. So definitely there's a little pressure on the margin, but we try to remain, because still there's 30-40% of oil and gas orders which are booked. So those are a little better margin. So on an average, 14 to 15% EBITDA is what we should look at.
14 to 15% is on the blended company outlook for this year, or is it just on these orders?
Just on these orders, as well as on the company overall, we try to remain in that range between 14 to 16%.
Right, because I remember the last time we spoke, you did say that you were looking at anywhere between 16 to 18%, but be that as it may, give us a sense of your stainless steel, order book that you have right now. Can you break up your entire order book, including this order? How much of that is from stainless steel pipes? Because that, I believe, is the margin driver for the company.
I would disagree over there. We have orders in carbon steel which are also margin drivers. As on 1st August, our order book was 2,345 crores. Post this order booking, it is now highest ever, which is 3,500 crores. Of this, roughly 25 to 30% is stainless steel.
25 to 30% is stainless steel. Okay, all right. But so your margins now it looks like you're not so optimistic about getting to the high teens. You're sticking in that band of around 14 to around 16%. Okay, we get that then. What about for revenue growth for the year? How should things look like? What kind of a I recall the last time you joined us, you were talking about a 20% growth. Do you stick to that, or do you believe because now you're getting new orders, you'll start executing some of them? Will that number be better?
So the orders what we've received is for a longer duration. So we still stick to that 20% number with, of course, the commodities being at a constant level. So 20% is what we are targeting.
Can you define longer duration, this 1,200 crore order book? How many years is this executable over?
Will go on until the end of next financial year.
Okay.
So FY24.
Yes.
So FY24, then I'm just suspecting that 20% this year in terms of revenue growth. For the next year as well, things will look up if you're going to be executing this 1,200 crore order. So what should the revenue growth be for FY24? Normally we want to know about the near term, but we can talk about FY24 since visibility is there now. You can do another 20% or more than that?
It is very difficult to say right now because this is the first order we book for such a long term.
Okay.
But yes, we target to be around 15-20% revenue growth rate, and we are working on to see that minimum of 15-20% is achieved.
Okay, all right. You know, you had this this hot extrusion 20,000 tons odd that came on stream or was to come on stream. You could correct me on this, but could you tell us how is that ramping up? What is the current capacity utilization levels if it's already been commissioned? And that's I think another margin driver for you.
So we had two major expansions which had come into commercial production this year. Okay. One is the extrusion press, which you are talking about. There we plan to utilize 25-30% of the capacity this year. Another is also carbon steel pipe manufacturing plant. There we plan to utilize about 40% of the capacity.
Okay.
All right. And can you give us a sense of what your order inflow target for this year would be? Because, I mean, you've won an order in an area which you haven't won before. So that opens the gate for a lot more other orders. So are you participating in any of those tenders? How does this process work? Can you give us a sense of how much we can anticipate in this year, and if not this year, maybe next year as well? How big this could be for you?
As I mentioned, there's a lot of thrust on water projects. We're building a lot of projects in Gujarat, Rajasthan. We are expecting quite a few orders, but we are also cautious because finally the water segment is much more competitive than the oil and gas segment. And just to keep the margins also in watch, we are not going very, very technical.
Okay, all right. Split up your order book for us, Manoj. How much of it would be, coming geographically? You mentioned Gujarat, Rajasthan, I think so. If you could give us a rough geographic breakup. And also, I believe you were planning on setting up a plant outside Gujarat. As of now, I think most of your plants are in Gujarat. So what's the plan? What is the capex of that front? Both those two aspects, geographic breakup of order book and expansion plans out of Gujarat.
So of the total order book, I would say most of 50% is oil and gas and 50% is water. Water is mostly on the western part of India, whereas oil and gas is pan-India. So that's how geographically our order book is broken up. And on the new plant, we are yet to finalize the location, which in next 2 to 3 months, mostly in the eastern part of India. So in next 2 to 3 months, we will be identifying the land and working on the other things.
That's interesting. Eastern part of the country. I mean, what's the kind of rough capital expenditure plan that you have on this new plant?
180 to 200 crores is what we expect, because it will be a pipe plant as well as the coating plant.
And you will fund that internally?
Yeah.
And I think in the past you mentioned that asset turn normally is around...
Most of it will be internal.
I think in the past you mentioned asset turn is 2 times odd, right? So this plant will come, will be able to, when it's complete, it will give revenues of close to around 400 crores?
More than that.
More,
how much?
3 times?
Close to 500, 550.
So 2.5 times, 2.
So, we have two major, we have two major expansions, capex plans. One is stainless steel cold finishing, and another is carbon steel pipe at a different.
No, Manoj, I'm referring to
so
this.
Both put together, it will be 2 times.
No, Manoj, I'm referring to this plant that you're planning on setting up in East India. You said that you'll spend around 180 to 200 crores. So what is the asset turnover for this? And how long does it take to set up a plant according to your estimates? From the time of finalization of the land, how long will it take?
It will take maximum 18 months.
18 months.
And it can be anywhere between 2 times to 3 times, depending on what sector.
And it ramps up immediately, is it? Or it takes gradual time, it takes some time to gradually ramp up to full?
It will take a little time to ramp up.
Okay, no, because what we're trying to understand is, say 3 months from now, you finalize the land, etc. It takes about 18 months. So that brings the story to FY25. And that year maybe would be the year of gradual ramp up. By FY26 is where we can expect this additional 500 crores. Is that correct?
Yes.
All right. Take that point, Manoj. Thank you so much for joining in and giving us the outlook on your business and wish you
Thank you.
more orders in the space that you recently won orders in, and more so, which are more margin accretive as well. With that, we take a short break. On the other side, we get you more on the markets as well as individual stocks.